Hello, our topic for this video is your final tax on certain passive income. So, we already learned that there are different schemes on taxation, and that is whether it is subject to regular income tax or final income tax. And we're done with the other final tax, which is your capital gains. And we talk also about your dealings, which is subject to RIT. Just remember, any item of our income should be taxed either on these two, unless it is exempt. So, unless it is exempt, it should be taxed either at final tax or at regular income tax. So, here in this particular topic, we will learn much on different items which is subject to final tax. And this is a tax on certain passive income. So what should we expect in this particular video lecture? So here are the topics that we will learn here. First, your final withholding system. So although we have already discussed the difference between a creditable withholding system and a final withholding system, we'll take a look back on what is a final withholding system. Next, we talk about your final tax rates, of course, on your certain passive income. So take note, our topic will revolve only on your passive income. And then, how do we file your final tax? How do we file your final tax? Let's start. So to start, we discuss again what are the characteristics of a final withholding system. So remember here in a withholding system, we have here your income payor and income payee. So again, who withholds? It is the payor withholds. This income payee is the income earner. The income payee is the income earner. Now, the the payor, when the payor pays now your payee for the income earned by the payee, the payor withholds. Now, this withholding, we said before, is either creditable withholding or final withholding. So we'll take a look into your final withholding system. So what are the characteristics? So the first characteristic is it is a withholding by the income payer. So again, we said that if the payer will pay the payee an income, the payer will withhold a certain percentage of that income. Next, the amount withheld here is the final tax. So what is the difference again of that final tax as opposed to your creditable withholding? So in your final tax, the tax withheld that is equal to the tax due on that particular item of income. So the amount withheld is the final tax. Next, it only applies to certain passive income. So take note of the word used here, certain passive income. So only final withholding system applies to certain passive income because here we talk about your final taxes on passive income. Okay, so we look into the characteristics as to your passive income, but take note if that final withholding system applies to dealings in properties. So our characteristic there is only applies to certain dealings in properties, right? So how about in your partnership soon? You learn that final withholding system applies to certain partnerships only. So this characteristic of a final withholding system, we apply it to your passive income. Okay? So maybe you're asking, sir, di ba may final tax naman sa dealings? So bakit hindi natin ilagay doon na certain applies only to dealings, blah, blah, blah. So this is in the context of final withholding system in passive income. Clear? Okay, so again, just like your any other income, a passive income can either be subject to final tax and regular income tax. So we need to learn what are the items subject to final tax and what are the items subject to regular income tax. So as we go through, we will learn what are the items subject to final tax and regular income tax. Just always remember this, guys. An item of your income is subject to two schemes of taxation. final tax, and regular income tax. And all of our discussions will revolve on this. So how do we tax it? Is it under final tax or under regular income tax? Just so that our topic now is a passive income. How do we tax it? Is it under final or under regular income tax? So this is really a misnomer. They took it as a final tax per se, but actually final taxes is applicable to almost all items of our income. So per item of your income, soon you will learn that there are items that is subject to final tax. There are items subject to regular income tax. And you just need to know the relationship or the characteristics of those two items so that you can properly tax it. Because if you think that at an income as purely part of your regular income tax, then it is hard because actually a scheme of taxation revolves only on these two, whether it is subject to final tax or regular income tax. So, for example, okay, dealings in properties, we learned that some items are final tax, some items are regular income tax. Next, here, passive income. Some items are final tax, some items are regular income tax. So when we go to your partnership, if that is a general professional partnership or a business partnership, some items are subject to final tax, some are subject to RIT. Actually, uh, it is like a dividend tax on the what do you call this one? Share of the partner in the income. So my dividend tax it. So you will learn there is a final tax. Another compensation income. Compensation income, you will learn that some fringe benefits. What are these fringe benefits? There's are benefits given to the employees from the employer. So some fringe benefits are subject to final tax. So again, that is part of your compensation, however, subject to final tax. So here, our main topic is your passive income. It can be subject to final tax or regular income tax. Just take note of these items, guys. Okay? So passive income. So what is a passive income? We said before, a passive income is an income that does not require any action or participation from the taxpayer. You are earning an income without doing anything. So actually, less participation or less action, but you earn an income. So for example, you earn interest over the passage of time. So what makes your income an income? Passage of time, not your mere participation. Hence, it is known as passive income. There is no exert of effort coming from the taxpayer, but the taxpayer earned an income. We call that a passive income. How about an active income? So, what is an active income? An active income is an income with effort, of course. It arises from the active pursuit of business. And when we talk about pursuit of business, this must be based on the ordinary course of business of the particular business entity. So, if that is a corporation, how do we determine the ordinary course? It is based on the articles of incorporation. But if that is a uh, partnership, it is on the contract of partnership. How about if that is a sole proprietorship? Normally, it is based on the registration. It is in the business registration wherein we can see the normal pursuit of the business or the ordinary course of the business. Okay, take note, if there is no effort, normally we call that passive income. If there is an effort based on the active pursuit of the business, we call that one an active income. Okay, so our main dealings now in this particular video or lecture, we learn about your passive income. Okay, so we go first on a particular item which we discussed also before, gross income taxation. So we said we can be taxed on your net income taxation or a gross income taxation. And here we also have your gross income taxation. We talk about your gross income taxation on certain items of passive income. So what do we mean by a gross income taxation again? A gross income taxation is a tax on the gross income, tax on gross income per se, meaning we tax the gross income without any reduction. So whatever is the amount of the gross income, that is the amount that we tax. Okay? So This mode of taxation applies to two entities only or two individuals only, which we learned before in your what do you call this one? Your status of income. So we have your NRA, ETB, and NRFC. Take note, guys, in all income of these persons, they are taxed on these rates. So we have your NRA, this should be NETB, NRA and ETB, 25% final tax rate, 25% final tax rate, and for non-resident foreign corporation, 30%. Okay? Non-resident alien not engaged in trade or business, and NRFC. So NRA and ETB, 25%. So this gross income taxation is treated as a final income tax. This gross income taxation is treated as a final income tax, and it only applies to these two persons, NRA and ETB and NRFC. Sir, why do we say NRFC is a person? Because it has a personality, only that it is a juridical person. Okay, so it only applies to two persons, NRA and ETB and NRFC. Final income tax. So all of our passive incomes later, you will learn that they are taxed at 25% at 30%, except for certain items, in which we will also learn what are those items. So what is this rationale of placing your gross income taxation and a final tax rate on these two individuals? That is because these individuals have high risk of compliance. And we let the income payer to withheld that particular tax already. Why? Because these individuals will not stay long here in the Philippines. So after their particular billing, they will go already. So how will they file their tax returns? So the government, so that they will comply, they let them to be taxed under gross income taxation and under final withholding system. So they are taxed at gross income and using final withholding system. So here, we tax them at gross income and we apply a final tax rate. So what is the final tax rate on NRA and ETB? 25%. NRFC, 30%. Sir, what does that mean? All uh, all items of income of these two individuals should be taxed on those. So, for example, NRA and ETB has the following income. It has a professional fee. It has a professional fee. So gain on sale of ordinary asset, 50,000. 100,000 is the professional fee. Let's say it has a uh, royalty. It has a royalty fee of 300,000. How do we tax this? We said it is taxed at gross income. So you just total this income. So we have 450,000 and it is taxed at final tax rate. So times 25%. So 450,000 multiplied by 25%. So that is the amount of the tax of our NRA and ETB, 112,500. Okay? So as you can see, it is taxed at gross income applying final withholding system. Who withholds again? Who withholds? It is the income payer. Okay? So you just apply the rates, 25% or 30%, whether the individual is NRA and ETB or NRFC. Okay? So we proceed now to your different items of passive income subject to tax. We start first with interest. So for interest, I place here a tabular format of our final tax rates. So first, we need to know whether that interest is an interest on local currency or an interest on foreign currency. Okay. By the way, guys, this final taxes are territorial in nature. So when we say territorial in nature, it only applies within the territory. You already know that one, an inherent limitation of our taxation. Why? Because you cannot impose the other country to withhold taxes for you. Therefore, if this passive income are earned here in the Philippines, it is subject to this final tax. Okay? So please do not forget the different things that we have learned before, because those are necessary learnings that you need as we go through this lesson or this particular subject. Because what's hard here in taxation is that you must know all the details as we go through. You must not forget those details, because soon, if we try to make an income tax return, you should know all the items of the income and how do we tax them, so that you can properly compute for the items of the regular income tax. And you should know what is exempt, what is not exempt. Okay, so you need to know for these limitations as we go through still. You need to know about the situs, the gross income. You need to know about the final taxes, the regular income tax. So please do not forget them. Okay, so we go back to our topic. So here in your interest, you need to look whether the interest is a local currency or a foreign currency. Okay, so what is a local currency? A local currency, of course, is denominated in peso, and a foreign currency is, of course, not denominated in peso. It is not denominated in peso. Okay, so you look whether the interest came from your local currency or foreign currency. So, what interest income are subject to final taxes? What interest income are subject to final taxes? So, normally, interest income on your bank deposits. We also have your deposit substitute, your government securities, your money market placements, your trust funds, or anything that is registered under the Bangko Sentral ng Pilipinas. So those interest income on your bank deposits, deposit substitute, government securities, money market placement, trust funds, or under items of BSP. So we look as to the interest, whether the interest received is of local currency or foreign currency. If that is a local currency, guys, here, you look whether it is short term or long term. So if that is a local currency, you look whether it is short term or long term. Okay. So if that is a local currency, short term, look at the tax rates. For items of your residence and your NRA, ETB, and RC, all of them except NRA and ETB and NRFC, 20%. Okay. So except the two that we have discussed a while back and except this one, okay, 20%. So RC and RCRA and RAETB, domestic corporation, resident foreign corporation, 20%. While NRA and ETB, 25%, NRFC, 30%. Because again, what are these rates? This is the gross income taxation of your NRA and ETB and NRFC that is subject to final withholding tax system. Clear? Okay. So this is the final tax rates for the two. So all 20% except NRA and ETB and RFC. Clear? Okay. Next, for your long term, for your individuals, they are exempt, while for corporations, is still subject to 20%. Okay, so individuals, they are exempt, while your corporation is still subject to 20%. Okay, so ayan na. We place them in a tabular format. Clear? For long term, exempt for individuals, except for NRA and ETB subject to 25%. And for corporation, the same. For your corporation, the same. Okay. Sir, when can we say it is short term or long term? We say it is short term if ever the deposit is less than 5 years. Long term if the deposit is greater or equal to 5 years. Okay. But take note, guys, our tax code provided for a pretermination final tax rate. Pretermination final tax rate. So what is that pretermination final tax rate? The pretermination final tax rate is to be applied to your long-term rates. So here, as you can see, we have here exam, and I provided two asterisks, and here we have here subject to pretermination. So it means, guys, that even though it is initially exempt, but if it's preterminated, it is subject to final tax. If initially it is exempt, but it is preterminated, it is subject to final tax. Sir, why is there a pretermination rate? Because hindi nyo pwedeng gulangan ang gobyerno. Why? Because what if you entered into a long term and then after 3 years, you preterminated? You are exempt? No. Because we said if that is less than 5 years, it is subject to tax. So you go back to your 20% should have been, right? But if everyone enters to that way of scheme, right? You just invest, and then there's an interest now, and you place your investment as if it is long term. Therefore, no one is to be subject now to a final tax. But if this pre-termination rule is inserted, it means that you cannot go and uh, make fun of the tax of your interest just by, let's say, going into your long-term investment, and then suddenly you will pre-terminate it. And once pre-terminated, exempt ka. Pagka ganon, lugi ang gobyerno. So ang ginawa ng gobyerno, pag nag-long term ka, tapos nag-pre-terminate ka, ay taxable ka na. Clear? Okay. So if that is long term and it is pre-terminated during the term, it is subject to tax. So let's have an example. Let's have an example here. So we have here a long-term deposit. So let's say 6 years, amounting to 200,000. The interest income is equal to 10% per year. 10% per year. Okay. So if ever, let's say after 6 years, not pre-terminated, therefore this is exempt because initially it is exempt and you finish the long-term period, which is greater or equal to 5 years. Clear? Okay. How about if second scenario, after let's say 4 years. After 4 years, it is pre-terminated. If after 4 years, it is pre-terminated, what do? We will now tax it. We will not tax. We will now tax it. So what is the tax rate, sir? If the tax rate is based on the table here, if it's less than 3 years, 20%. 3 to 4 years, so this is at least 3 years. To less than 4 years, 12%. At least 4 years, less than 5 years, 5%. So here, after 4 years, it is pre-terminated. So here, all interest income from year 1 to year 4, we will tax it. We will tax it. So let's say you pre-terminated it on June 30, year 4. You pre-terminated it to June 30, year 4. So all interest income from year 1 to year 4, you will tax it. So we have here year 1, year 2, year 3, and year 4. Saan siya nag-fall? Dun sa 4 to 5 years. 4 to 5 years. You get for the interest income for each year. So we have here 200,000 subject to 10%. So 200,000, 20,000, 200,000 times 10%, 20,000. 200,000 times 10%, 20,000. And then 200,000 times 10% times 6 over 12. So, sir, why did you multiply it to your 6 over 12? Because that is the pre-termination period. Pre-termination period. Okay? So, 200,000 times 10% times 6 over 12 is, this is equal to 10,000. Okay, so let's look as to whether it is within 4 to 5 years or 3 to 4 years. 1 year, 2 years, 3 years. So we have here 3.5 years. So it is 3 to 4 years pala. It is 3 to 4 years pala. So 3 to 4 years, what is the rate? 12%. So you just total the interest income. So total interest income is 70,000 times 12%. So 70,000 times 12%, this is the amount of your final tax. So 70,000 times 12% is 8,400. 8,400. Okay, so that is the amount of our final tax. So here, as you can see, although initially it is 6 years, but after 4 years or June 30, year 4, let's say, June 30, year 4, we have here 70,000 total interest income is subjected to final tax. Take note, all interest income from year 1 to year 4 will be now taxed. We're clear? So if that is short term, again, individual or corporation, 20%. While if that is long term, individual, it is exempt. While for corporation is still 20%. But this exemption is subject to pre-termination rule. So what is our pre-termination rule? Depending, less than 3 years, 20%. At least 3 years to less than 4 years, 12%. At least 4 years to less than 5 years, 5%. Okay, so I hope we're clear here. Next, we have your foreign currency deposit. Foreign currency deposit. So what is this foreign currency deposit? This foreign currency deposit, guys, is of course a deposit denominated in foreign currency. So not in the currency of peso, not currency of peso. Now, our problem here in a foreign currency deposit unit is how do we tax them? So if that foreign currency comes from a resident, it is taxable. It is taxable. But if it comes from a non-resident, exempt. So as you can see here, guys, we look. Non-resident citizen. Non-resident citizen, exempt. Non-resident engaged, exempt. Non-resident not engaged, exempt. Non-resident foreign corporation, exempt. But if it's resident, taxable. If it's resident, it is taxable. Okay? So it is taxable. So here, 15, 15, 10, 15, 10, 15, 10. Okay. So what do we look here in your foreign currencies? How do we subject your taxes or your interest income from your foreign currencies? Okay, so here we look whether it is under FCDUs or EFCDUs. So if it is purely a foreign currency denominated unit or foreign currency depository bank, foreign currency depository, 15%, 15%. But if that is an expanded foreign currency, it is subject to 10%. Okay? It is subject to 10%. So guys, you must be careful on the problem whether it is FCDU or EFCDU. Sir, what if the problem is silent? What will we use? You assume, guys, that that is an FCDU. You assume that it is FCDU if the problem is silent. But normally, problems are not silent. It will tell you whether it is expanded foreign currency or foreign currency. Okay? Expanded foreign currency or foreign currency. Okay? So, ingat kayo if it's not expanded foreign currency deposit system or foreign currency ex or FCDU only. So, ingat kayo if it's that EFCDU or FCDU. Okay, so 15% or 10%. So let's have an example. So interest income from banks. Short term, 100,000. Long term, 300,000. Short term, assuming the interest income are all from local currencies. If that is all from local currencies, therefore we only have 100,000 multiplied by 20%. Why? Because the long term now is exempt. Tignan nyo yung local currency. Assuming individual tayo, so times 20%, we have here 20,000. So what if, assuming the interest income from long term is from a foreign bank, FCDU, and the short term is from a local bank, local currency. Okay, so assuming the interest income from the long term is from a foreign FCDU, so foreign currency, and the short term is from local bank, local currency. What is the amount of our final tax? Your answer here is still 100,000 times 20%. So 20,000. Sir, why? Because here the long term is from a foreign FCDU. Take note, territoriality. Territoriality. Clear? So what if the long term naman is a local FCDU? So nasa local bank natin at FCDU siya. Tapos yung short term is also in our local bank, local currency. Okay, so the short term is subject now to your local currency rate, which is 20%, 100,000 times 20%. Again, we assume individual. And the long term, which is now a foreign currency deposit unit, FCDU, you get the 15%. So we have here 300,000 times 15%. So 20, and then we have 45, so total 65,000. Okay? So mag-ingat kayo guys, whether that is a local currency deposit or a foreign currency deposit. And for foreign currency, take note whether that is FCDU or EFCDUs. Clear? Okay. So that's for interest. That's for interest. Again, your interest applies to bank deposits, securities, money market placements, those sanctions by BSP, what else? Trust funds. Okay, so if those items of interest income will be placed in your gross income, they are subject to final tax. They are subject to final tax. Okay, next. Sir, how about if ever we have a joint account? What if there is a joint account? If that joint account is owned by both uh, resident citizen and non-resident citizen, and it is a local currency, no problem. But if that joint account is owned by both resident citizen and non-resident citizen, we have a problem. We have a problem, especially if that is a foreign currency now. Okay, foreign currency. So take note, an RC under your FCDU is subject to 15%. NRC is subject to 10%. So for example, we have your FCDU interest income amounting to 100,000. NRC pala is exempt. RC is 15%. So we have here FCDU interest income of 100,000. 15% for RC, exempt for NRC. How do we tax that? So since that is joint account, presumption is 50-50. Presumption is 50-50. So 50%, 50,000, 50,000. So yung kay RC, at saka NRC, dun yun siya subject. So only the half is subject to 15%. The other is exempt. Why? Because we said all non-residents for FC or foreign currency deposit is exempt. While for your residents, they are subject to final tax. Okay? So ingat kayo pagka joint account yan. So magkano lang yung tax niya? 100,000? 50,000 times 15%. 50,000 times 15% is 7,500. Okay? 7,500. We go now to another item of our final tax. We have your dividends. So for your dividends, these are different distributions from a corporation. Distributions from corporation. So if the distribution of dividend is to individuals, to corporation. If that is individual, it is subject to final tax or regular income tax. But if that is a dividend to your corporation, we have your intercorporate dividends. Intercorporate dividends. This is exempt, except for your NRFC. Except for your NRFC. Okay? So here, look at it. So if we have your dividend income from your domestic corporation, we have here your rates. Resident citizen, non-resident citizen, and resident alien, 10%. Okay? Resident citizen, non-resident citizen, resident alien, 10%. And then we have your non-resident engaged trade in business, 20%. We have your non-resident not engaged in trade or business. It is subject to 25%. And then we have your NRFC, which is now subject to 30%. Okay, so here, guys, take note. For your dividends to corporation, intercorporate dividends, they are exempt except for NRFC. And take note, guys, these are dividend income from domestic corporation because that if that is a dividend income from a foreign corporation, if that is a dividend income from a foreign corporation, it is subject to RIT. It is subject to RIT. So it is important to know if the source of dividend is a domestic or a foreign corporation. Sir, what do we mean by a domestic? It is a corporation which is now, what do we call this one? Which is registered here in the Philippines, and uh, the incorporation here is made in the Philippines. How about a resident foreign corporation? The incorporation here of a resident for foreign corporation is made outside the Philippines, but it is also registered here in the Philippines as doing business. Okay, so take note, if that is a domestic corporation which gives dividends, we have here your tax rates. While for foreign corporation, it is subject to RIT. Subject to RIT. And what is the RIT of NRA and ETB and NRFC? 25% and 30%. So, hindi yun magbabago. Hindi yun magbabago for your foreign corporation, particularly NRA, NETB, and NRFC. So, importante tignan nyo kung galing sa domestic or yung foreign ang ating dividend. So, look at just the rates and you multiply the amount, that is the final tax. So, here, 10%. So, let's say you have here a dividend income. You have here a dividend income amounting to 50,000. If that is from a domestic corporation and you are a resident citizen, 10% is 5,000. If you are a domestic corporation also, we call that one intercorporate dividend, so you are exempt 0. But if that dividend income of 50,000 came from a resident foreign corporation, if the dividend income of 50,000 came from a resident foreign corporation, resident citizen, how much is the final tax? Final tax is 0 because it is subject to regular income tax. Clear? Okay, so I hope we're clear. Now, we have here your NRFC. The problem in your NRFC of your dividend income from your domestic corporation, it is subject to a tax sparing rule. So generally, it is subject to 30% final tax. You know that one. However, we have here an tax sparing rule. So what is the effect of this tax sparing rule or tax sparing rule under your NRFC. Now, instead of being taxed under 30%, it is now taxed at 15% preferential tax rate. So instead of having 30%, it is taxed at 15%. Now, sir, when can we say that the NRFC now is under tax sparing rule or not? So you just look as to the problem. Pag sinabi ng problem na yung NRFC, dividend income from domestic corporation, is within the tax sparing rule, use 15%. If no tax sparing rule, use 30%. So ang rule dito, kung pumasok yung tax sparing, 15%. If walang tax sparing, 30%. Clear? Sasasabihin niya ng problem. But in actual practice, how do we apply this? It is based now on your RMO number 27/2016. That is based on your section 28B, 5, paragraph B. That is under your National Internal Revenue Code as amended by your train law. So we have your general law, which is section 28B, 5B, and it is now implemented using your RMO number 27-2016. Now, I said 30% general rule, but if there is a tax sparing rule, 15%. So when do we apply it? Pag sinabi ng problem na may tax sparing rule, tax sparing rule. Pag walang sinabi ng problem na may tax sparing rule, edi use the general rule. So the tax sparing rule applies to your NRFC, which is a resident or is domiciled in a country which there is no treaty with the Philippines. So for example, A corporation, B corporation. B corporation, A corporation here is the Philippine corporation. B corporation is the non-resident foreign corporation, NRFC. Now let's say A, of course, Philippines, and B is a US corporation. Now, if there is effective tax treaty with US, so treaty between Philippines and US, therefore, tax sparing rule will not apply. Kasi kailangan walang effective tax treaty. Another problem, if ever that US or non-resident foreign corporation should adopt worldwide system of taxation. And lastly, it allows tax credit from your dividend which have been paid to the Philippines. Okay? So, ang problema dito actually in practice, guys, we have too much tax treaties that you cannot apply this tax sparing rule already. So for example, in US, we have a current we have a tax treaty. Therefore, you will not apply it. What else? In Singapore, we have a tax treaty. Therefore, you will not apply it. Clear? So you must look as to these three items. So first check, kailangan walang treaty. Pag na-check yan, second check, does it adopt worldwide system of taxation? If it adopts worldwide system of taxation, another check. Last check, kailangan kunin yung tax credit yan. Pag hindi niya kinuha ang tax credit, wala din. Sir, ano yung kunin nating tax credit? So for example, di ba, magbabayad yung NRFC sa atin ng 15%. So, halimbawa kung 50,000 yan, ang 15% ay 7.5. Dapat tong 7.5 na to, doon sa foreign country, kukunin niya to as additional deduction. So, pwedeng i-claim ni NRFC na deduction yun kay foreign country. Yun yung pangatlo. So, dapat yung tatlo check. Kung X lahat yung tatlo, hindi pwede. Clear? So, ang hirap talagang i-apply nitong NRFC as to your tax sparing rule. So, kailangan mag-apply ka muna, of course, in your BIR for your tax sparing rule, but you must show these three items. And how will you prove it? Ang hirap. Because tax treaty is very prevalent. Letter 3 or number 3, Number 3, there must be a tax credit. And how will you prove that? Again, there must be a law under the country or the foreign country that applies your tax credit. Okay, so again, madali lang siya in your here in your academic learning, but soon when you apply it, medyo mahirap siya. So the rule is 30% except if there is a tax sparing rule. Do not forget that. Okay? So do not forget the rates. Ang importante dito, tax rates. Dividends. So we're done now with dividends. Now, for your dividends, let's talk about your stock dividend. What is a stock dividend? A dividend that is given in the form of shares or stocks. This is not a taxable gain. Why? There's no realized benefit. There is only an increase on your dividend on your part, but no income on the income earner. Actually, there's no income on the income earner. Next, liquidating dividend. A liquidating dividend is a return of capital. And we said before, a gross income, there must be tax if ever that is a return on capital. But we say a liquidating dividend is a return of capital. Therefore, there is no final tax. Since that is a return of capital, we compare whether there is a gain or a loss. So it is subject to your dealings in properties. So if there is a gain, subject to ordinary gain. If there is a loss, subject to ordinary loss. So it is a return of capital. So whether a gain or a loss as to that return of capital, then we subject it. We subject it to your dealings. So, yun lang naman yung kakaiba din sa dividend. So, pagka cash dividend yan, yung rules pa rin. Stock dividend, no tax, no realized benefit. Liquidating dividend, this is a mere return of capital, but actually, it is more likely of a dealings in properties. And we learned about your dealings in properties already. That is either ordinary gain or ordinary loss. Next, we have your royalties. So for your royalties, these are certain percentages of income paid to a franchise normally. So what is a franchise if ever it is a cinema films, or similar works? So copyright naman to. Books, literary, and musical compositions, copyright din. Other passive royalties, and active royalties. So we group it based on these items. So first, we have your cinema films and similar works, books, literary, and musical compositions, other passive royalties, and active royalties. So how do we tax them? So if that is a cinema films and similar works, for your resident citizen, NRC, RA, DC, and RFC, 20%. So the same dito. RC, NRC, RA, DC, and RFC, and RFC, 20%. If that is NRA, ETB, and NRA and ETB, 25%. If that NRFC, 25%. Okay? So, yun. Pagka cinema films, ganyan ang rule. 20% RC, NRC, RA, DC, RFC. Others, 25%. Clear? Next. For your books, literary, and musical compositions, ang rule naman dito, if ever it is RC, NRC, RA, NRA, ETB, 10%. And then, if that is DC, RFC, 20%. So individuals, 10%, corporations, 20%. And we apply the final withholding tax system and your gross income taxation rules in your NRA and ETB and NRFC, because it will go back to their normal rates of 25% and 30%. How about other passive royalties? For your other passive royalties, we have your NRA and ETB, and then NRFC go back to their final withholding tax under your gross income taxation, 25% and 30%. Other individuals or other persons na lang para hindi tayo malito. Other persons, whether natural or juridical, what is the rate? 20%. How about if that is books, literary, whatsoever? We say that we have your individual, corporation, and your NRA and ETB and RFC. So individual, 10%, corporation, 20%, NRA and ETB and RFC, we have 25% and 30%. Okay? So balik dun sa rule. How about active royalties? Since that is already active, guys, then it is subject to RIT. And what is the RIT again of our NRA and ETB and NRFC? It is in the form of your final withholding system, 25% and 30%. Okay, so here guys, you just need to determine what type of royalty and you look as to the rate. What type of royalty and you look as to the rate, royalties. Next, we have your prices. For your prices, 10,000 and below, it is subject to RIT. Above 10,000, it is subject to 20% and 25% for your NRA and ETB, while RIT for your domestic corporation and non-resident foreign corporation. Okay, so sir, why are prices subject to RIT for your corporation? I don't also know the reason why. Because normally prices are without effort and are passive income. And as the nature of a passive income, it is normally subject to final tax. But I don't know why in your train law, they subject to RIT the prices of corporations. Because maybe corporations, when they win a larger amount. So they must be taxed at a larger rates. Because corporations are normally taxed at 30%. Maybe. So we just don't know the wisdom behind it. So here we look as to the prices. If the price is 10,000, uh, less than or equal to 10,000, it is subject to RIT. If it's 10,000 more than, it is subject to final tax. So let's say here are your different prices. Here are your different prices. So 2,000, 5,000, 20,000 and 100,000. How do we tax that? We tax that per price. So this is RIT, this is RIT, this is final tax, this is final tax. So if you are an individual, of course, you are subject at 20%. So 20% of 120,000 is equal to 24,000. If you are a corporation, you are subject all at RIT. If you are an NRA ETB, NRA ETB, 25%. So this will give you 30,000. This will give you 30,000. If you are NRFC, 30%. Okay? So tignan nyo lang if ever that is less than or equal to 10,000 or more than 10,000. Tapos ito per price, wag nyong i-total yung prices. Kasi iba't iba naman yung magbibigay ng price. So let's say, napanalunan mo to sa Chongsan, tapos napanalunan mo to sa SM, napanalunan mo to sa Robinsons, napanalunan mo tong 100 sa Victorias. Okay? So, yun, per price yan. Hindi siya as a total price. Okay? So, again, subject yan either as RIT or the 20% final tax prices. Next, we have your winnings. So for your winnings, only PCSO winnings are subject to final tax. Before kasi, we have also your sports, which is subject to final tax and then sports, ganun. Pero ngayon, hinati na lang nila as either PCSO winnings or other winnings. So, winnings generally is subject to 20% final tax. Winnings generally are subject to 20% final tax, except for other winnings. Except for PCSO winnings. Again, winnings generally are subject to 20% final tax, except for PCSO winnings. So other winnings, subject to 20%, and PCSO winnings, we look whether it is less than or equal to 10,000 or more than 10,000. So if that is less than or equal to 10,000, we have here your rates. Exempt for resident citizen, non-resident citizen exempt, resident alien exempt, NRA ETB exempt, NRA and ETB same rate, 25%. Domestic corporation, resident for foreign corporation exempt, non-resident foreign corporation, 30%. Tignan nyo, yung NRA and ETB and RFC remain the same siya na 25-30% because that's the rule that these particular persons are subject to that rate for convenience purposes and of course to make the collection of their taxes more efficient rather than they will be subjected to different tax rates. So as you can see, halos pare-pareho sila. 25, 30, 25, 30. NRA and ETB and NRFC. If the winnings is more than 10,000 for PCSO, 20% for resident citizen, 20% for non-resident citizen, 20% for resident alien, 20% for non-resident engaged trade in business, non-resident alien not engaged in trade or business, 25%, domestic and resident for foreign corporation, 20%, and RFC, 30%. So still, rule, it is at 20%. How about other winnings? So other winnings now is like your prices. Other winnings are taxed like your prices. As you can see, 20% sa individuals, while for corporations, it is subject at RIT. While of course your NRA and ETB and your NRFC remains the rates, which is 25% and 30%. Okay? So parang prices lang din. So balikan natin yung prices. So tignan nyo yung prices natin kanina, di ba? So we have here, if above 10,000, 20, 20, 20, 25, RIT, 30%. So they are almost the same. Other winnings and your prices above 10,000. Clear? So your prices are subject to 10,000 threshold. While your winnings, there is no subject of it. So hindi natin tinitignan na if the winnings is 10,000 or below. Yun lang ay dun sa PCSO. Pero other winnings, wag mo nang tignan. Clear? Okay, so tignan niyo yung PCSO winnings at saka other winnings as to your rates. Again, ang importante kasi dito talaga is kailangan nyo memorize yung rates at saka kung anong passive income yan. Kasi kahit naman magbigay ako ng napakaraming examples dito, if ever hindi nyo memorize kung ano yung rate at kung anong passive income yan, hindi nyo lang din makukuha. So kailangan alam natin kung anong passive income at kung anong rate. Kaya nga naka-tabular yan. So titignan nyo based on your table, saan to papasok? PCSO winnings, tapos tignan nyo kung ano siya, kung ano yung taxpayer. Individual ba or corporation? Okay? Winnings. Next, we have your informal tax reward. Ito yung nakakatuwang type of final tax. Because actually, this is not a passive income kasi meron kang ginawa. Nagdaldal ka. Sir, bakit nagdaldal naman? Kasi nga, nagsumbong ka kay BIR, kaya ka nagkaroon ng income. Without your sumbong, wala ka namang income. Diba? So, this is not actually a passive income, but normally they include it. But I don't think it's a passive income. So informal tax reward, this is a reward based on an informant regarding possible evasion of taxes. So if ever you say that yung kapitbahay mo nag-evade ng taxes na ganito yung amount, yung makokolekta doon or 1 million, whichever is lower, doon yung makukuha mo. Okay? So 10% of the collected or 1 million, whichever is lower. So what are the rates? So it is subject to final tax. So we have here 10% resident citizen, non-resident citizen, resident alien, NRA ETB, including domestic corporation and resident foreign corporation. And you go back to the rule regarding NRA ETB, NRA and ETB and NRFC. So what is the amount of reward? That is 10% of the amount imposed and collected or 1 million. So for example, so nireklamo mo si B na hindi daw siya nagbayad ng 10 million. Pero ang na-impose and na-collect lang pala is 8 million. So kunin mo yung 10% niyan. Yan yung informer tax reward mo. Okay? 800,000 versus 1 million. Anong lower? 800,000. Pero yung 800,000, hindi yan yung makukuha mo talaga. Mababawasan pa yun ng final tax sa 10%. That's 80,000. So 720,000 lang. So imagine, nagreklamo ka, matatax ka pa. Matatax ka ng 10%. Delikado pa ang buhay mo. Sir, bakit naman delikado yung buhay ko? Because normally guys, big persons yung mga nag-e-evade or alam naman ireklamo mo yung small time, di ba? Siyempre, ireklamo yung mga big time para malaki yung makuha mo. And baka ngayon, 720,000 ang pera mo, bukas, ubos na yung 720,000. Why ubos na? Kasi baka pinanglamay at panglilibing na sa'yo, 'di ba? Kaya nga parang mas nakakatakot pa na okay kumita ka 1 million or less than 1 million pero bukas baka patay ka na. 'Di ba? We just don't know. But anyway, that's for informer tax reward. Is this still applicable? Yes, up to now. Sir, do you know any person who actually earned informer tax reward? I don't know anyone yet, and who would tell that he is an informer tax reward. He had an informer tax reward because, of course, baka pag nalaman, baka ipapatay, di ba? Oy, nireklamo mo pala ako, di ba? O, mga maging bad blood pa yan. We just don't know. But here, take note, you just compare the amount imposed and collected, get the 10% versus 1 million, that is your informer tax reward. And that informer tax reward is subject to 10% final tax. You get your net informer tax reward, which is 720,000. But take note, the informer must not be BIR employee or officer. Bakit? Kasi syempre baka alam mo based on your audit or sinabi lang dun sa loob tapos nireklamo mo tapos hati-hati kayo, di ba? So, lugi naman yung gobyerno. Safeguard yan yung gobyerno. Another, public official or employee kasi marami silang knowledge regarding that. So, if ever sila yung magrereklamo, alam natin agad. So, baka alam lang din nila pero hindi nila inaudit na lang. So, ang ginawa nila para kumita, ireklamo na lang. So, bawal din sila. And take note, ito pa malupit. If ever you are a relative within the 6th degree of consanguinity of either A or B. So, if you are a relative by blood, yung consanguinity is by blood. Alam niyo yung jus sanguinis, jus sanguinis, or jus sanguinis, or you know it as jus sanguinis, yung Jus sanguinis. Okay. Jus sanguinis, which is based on blood. Nationality by blood naman yung jus sanguinis. Pero pag consanguinity came from the word sanguinis, which is blood. So if you are a relative within the 6th degree of consanguinity of either A or B, you cannot also. Why? Kasi baka sabit-sabihin lang din. Alam nyo ba yung consanguinity? So for example, ito yung lola mo, A and B. A is si lolo, B is si lola. Okay. Ito yung tatay mo. Ikaw to. First, second. Okay? So yung tatay pa ng lolo mo, so father niya, father of lolo, yan yung third. Clear? Tapos, meron uli silang kapatid. So, kapatid ng tatay mo, kapatid ng tatay. So, if ever we want to draw from tatay to kapatid ng tatay, ilang degree yan? First to tatay, second to lolo, third to kapatid ng tatay. Pinsan is your fourth. See, fourth consanguinity. Fourth consanguinity. Anak ni pinsan. Anak ni pinsan. Fifth consanguinity. Anak ng anak ni pinsan. Anak ng anak. Sixth consanguinity. So as you can see, sobrang haba ng consanguinity niya. Imagine, parang apo mo na kay pinsan, apo kay pinsan, is within the 6th degree. Is within the 6th degree. So, tingin mo makakakuha ka pa ba? Parang grabe yung safeguard, di ba? So, delikado na nga yung buhay mo, matatax ka pa, tapos 6th degree pa ng BIR o kaya public official, ang hirap, ang hirap. Pero, ikaw, kung gusto mong yumaman, just go with your informer tax reward. Okay? That's for informer tax reward. So, we're almost done with your different final taxes. So we're almost done with your different final taxes. We go now to your final tax filing. So how do we file your final tax filing? We have two. How do we file your final tax return? We have two. We have your BIR 0619F and 1601FQ. So actually before we have still 1602, but actually with your train, we only have two now, 0619F and 1601-FQ. So what is this 0619F? So this is for your monthly remittance. You will only use this for the first 2 months of the quarter. First 2 months of the quarter. And for the third quarter, you use 1601FQ. So when do we file it? On the 10th day of the following month. And for your 1601FQ, it is the last day of the month following the end of the taxable quarter. So for example, so we have here January, February, March. When is the deadline of January? That is on February 10th, 10th day of the following month. February, that is March 10th. And March is the third month of the quarter. Third month of the quarter. Therefore, it will be filed the last day of the month following the end of the taxable quarter. So that is on April 30. April 30. Last day until April 30. So I hope we're clear here. So first 2 months of the quarter, 0619F. Last month of the quarter, 1601FQ. Actually, 0619F is not known as a withholding form. It is not a withholding form. It is more of a payment form. Payment form by virtue of RR 11-2018. But 1601FQ is more of your withholding form. They are classified as withholding form, while your 0619F is classified as a payment form. Okay? 1601FQ and 0619F. First 2 months of the quarter, 0619F, 1601FQ, last month of the quarter, and due 30 days after, or last day of the following month. 10th day of the following month for 0619F. Okay, so that's it for this final taxes. Take note, we have here certain passive incomes. You must know the passive income, type of passive income, whether it's subject to final tax or regular income tax. If that is subject to final tax, what is the rate? Actually, mas mahirap pa nga itong final tax kasi ang daming rates. Kung regular income tax yan, alam mo lang na isa lang yung tax table mo. Ito, madaming rates. But I know that you can memorize them and you must know what are the different passive incomes, of course. Okay, so that's it. Thank you for watching this video. I hope you learned something. Bye.